No tax on tips out of the Big Beautiful Bill Act. Let's talk about this. $25,000 per tax return. Got to be mindful of this. We're going to talk about what industries this affects. An example. Here's the big thing to note is that this tip income needs to be segregated out from regular wages, and for those that are 1099 workers, gig workers, meaning you're not getting a W-2. How do you know you're not getting a W-2? There's no taxes being withheld from your pay. That means you're a 1099 worker. And with you, you qualify as well, but you've got to segregate out how much of your income is from tips and how much from the other portion of what you're earning. Now, what we're talking about here is a tax deduction. It's not just that it's tax-free income. It results in that, but you are going to report all of your tip income on your W-2 for wages, on your 1099, therefore on your business, however you're recording that for your business income, typically going to be Schedule C. So you're recognizing all that income, but you're getting this as a deduction. Now, it's called an above-line deduction. That's just fancy to say that you don't have to itemize your deductions. All you got to know is you will get this deduction. Now, when we talk about $25,000 per tax return, it's not really per person, because I'm going to skip ahead here, but marrying filing jointly gets $25,000 deduction, meaning if both spouses, if they're both earning, well, that's great, and maybe combined the tips are over $25,000, but it's going to be a max $25,000 deduction. $25,000 max for single, $25,000 max for head of household. Final bill, final law, this is how it works. Yes, might be unfair. Now, if you're married filing separately, it's a big goose egg, no tax deduction. Now, this is going to be a deduction for federal taxes. So it's not a deduction for payroll tax, still going to be wages subject to Social Security and Medicare. States, well, they're probably not going to comply. This doesn't mean that it's going to be a deduction that the states are going to allow. And it's not a deduction for self-employment taxes. You're going to report those tips all on Schedule C, and then it will be a deduction on a different form, estimated, or my guess is Schedule 1. So your tip income still will be subject to these other taxes. Now, when I talk about it must be separately stated, what I'm talking about there is on the W-2, the IRS has already indicated that it would be a special new coding in box 12. Yes, there is a box right now that reports Social Security tips, but that's not the box that they will look to in determining this no tax on tips up to $25,000 per return. Now, for Form 1099, it's a self-tracking. Now, I want to run through a list of the industries. Now, you may have already guessed this, but the bill, the OBBBA, so the Tax Act of this does go and list very specifically some industries and acted as though maybe some of these are some new industries to be included in tip income. But with that being said, who gets to include their tips as the deduction? Well, for those that provide and deliver and serve food and beverages. So, of course, that's waiters, waitresses. There's probably other titles to those positions, but that's what it's indicated to be. But also then those that are Uber drivers that deliver food and drinks, if you will, they're getting tips. Well, that's going to be included. Barbers and hair care, nail care and aesthetics. Also, those that are providing services for body and spa treatments. Uber, taxi drivers, Lyft drivers. Now, there's a phase out, which just means that if you make over $150,000, that's single or head of household, the deduction is going to phase out. Over $300,000 married filing jointly. Now, that doesn't mean that just your wages. That means your overall income. Over those thresholds, you'll start losing that deduction. This is only going to be for tax years 25 through 2028. Now, I want to run through an example here for you. And with this example, we're going to be talking about Pat and Sandy. Now, with Pat and Sandy, just go with this. Pat had $28,000 in tips. Sandy had $14,000 in tips. So if Pat filed single, meaning filed a single return. If you're married, you don't get to file single. You file a single return, Pat would get a $25,000 deduction. Now, Sandy filing a single return, well, of course, would get a $14,000 deduction. So you're not going to get a deduction for more than what your tips were, and it's a max $25,000. Now, if Pat and Sandy were married, filing jointly, even though their combined tips is in excess of $25,000, there's only going to be a $25,000 deduction. You may find some things online that indicate that it's a $50,000 deduction, but that's not how it was in the final language that's now the law. It's going to be $25,000 max deduction per return. Married filing separately, as we talked about before, is going to lead to no deduction. Now, with that, Pat and Sandy, they do married filing separately. Well, they're not going to get that deduction. So this is pretty big time news. You know, related to this, as a tax professional, I would say get with your own tax professional. But if you know that you're going to have tip income and you're below the thresholds, there won't be any phase outs of that deduction, and you now understand it's a max $25,000 deduction per return. Well, with that, if you now know you're going to have less tax come tax time, then you should consider and proceed cautiously in having less taxes withheld from your tip income, if you will. So with all that being said, when you get a refund, it's just getting your own money back. So why not just get more take home now? You want to move carefully related to that. All right, hey, thanks for tuning in. Check out the body of this video. I've got other links to other seminars. I've got a summary of the One Big Beautiful Bill Act, as well as some other goodies. All right, hey, thanks for tuning in. I'd love it if you'd subscribe. And then don't you ever forget, you've never met a CPA quite like me. You have a great one.